Hey everyone, I'm going to show you how to trade with fake money, trade in a simulator, so that you can get started with day trading and kind of learn the basics of day trading. So what I have here is a website known as TradingView. It's what many traders use for their charts. It is not the only tool out there, but it is certainly one of the most popular tools. Now, I'm going to be explaining the simulator using this tool, but there are many other simulators out there, many other charting tools. Pick which one works best for you. Most of them are the same. Many of them have different features, but most of them are relatively the same. So we're going to walk you through how this all works. So the first step is to go to tradingview.com, and when you go to the page, you'll see this. You do not need to set up an account, but you're more than welcome to. Where you want to start is you want to hover over products and you want to go to super charts. So you're going to want to click that, and that will pull up the charting tool. I think by default it will open up Apple. I think that's the general ticker that it opens up. But you'll see this charting tool. Now this might seem overwhelming at first as a beginner, but I'm here to tell you that it is not that difficult once you get the hang of it. So if you've got a little bit of computer experience, then this will be natural to you over time. All right, so what we have here is the charting tool. In the middle we have our chart, as you can see, represented by two types of candles. We have green candles, which show bullish push to the upside, so that means that price is increasing. And then we have red candles, which shows bearish signal, indicating that price is moving to the downside or price is decreasing. Very simple enough. You can scroll and zoom in. I believe on like a laptop it's command and wheel or whatever. On your mouse you can kind of zoom in and see the candles, and you can zoom out, which is really, really good. You might get these occasional pop-ups. Just close those out. They're not really necessary for your charting. And then also we have our tools on the left, which we'll get into. I'll kind of explain how many of them work and then identify kind of the main ones that I think beginners should be looking at. So we've got our tools on the left. We've got our ticker symbol here in the top left corner. We've also got some numbers here that indicate price. This is the opening price. So this is the opening price for the day. When the market opened at 9:30. This is the high of price for the day. This is the low of the price, and this is the closing price of the day. This is the total difference between the open and close, right? And then this is a percentage of that difference. So we have basically these price values. Now, as you hover over candles, what you'll notice is that those numbers change. And so this tool is really great because as you hover over specific candles, it'll show you the price for that candle on those in that price section in the top left corner, which is nice. So if you want to know a specific candlestick's opening price and closing price and the high and the low, then you can just simply hover over that candlestick and it will show that. Now, what is a candlestick? A candlestick basically represents price. So I'm going to use a tool here. The first tool I'm going to use is just this text tool. So you can click the text tool, and then you can pop some text directly on your chart. So a green candle and a red candlestick both show price. They show it a little bit differently. So all candlesticks are made up of 4 different components. We have the open price, the close price, the high price. Let's just say high and the low. I'm gonna zoom. I'm gonna make the text a little bit bigger. We've got a toolbar here to kind of represent that. Okay, cool. So every candlestick is made up of these four. Makes up these four components: the opening price, the closing price, the high, and the low. So the opening price for a green candle is the bottom of what we call this body. And this body is also known as the real body. That's just another name of what this kind of indicates. And what it shows is it shows price moving up, and it also shows control of buyers. So as buyers are pushing price up, right, we are creating this body from the opening price, which sits at the bottom of that candlestick. So I'm going to click over here on my tools. I'm going to grab an arrow marker and I'm going to mark out this. Right? So this area is the opening price. Oh, it says join for free. Looks like it wants you to join for free, so just go ahead and sign up, I guess. I guess they've changed that now, so we're gonna sign up. Okay, cool. So here is the open price of a green candlestick. So all candlesticks that are green, they open at the bottom of the body. The top of the body is the close price. Right? Top of the body is the close price. So every candlestick represents a specific time frame. So in this particular case, for this chart, we are on the 1-day time frame. So what that means is every candlestick represents one whole day from 9:30 a.m. Eastern till 4 p.m. Eastern. It shows what price opened at and what price closed at. Okay. And then also we have these extensions from the body, right? We have one on the top and then we have one on the bottom. Now, these are optional, but they represent the high, and the low. And the low, right? Low. Cool. So these wicks represent the high. So how high did price move during that daily time frame, and the low. How low did price go, right? So how much did sellers push price down, right? That represents the low. So every green candlestick, you open at the bottom of the body, and then price fluctuates within that time frame, and then it closes. So as long as price closes above the open, the candlestick will be green. Okay, so if it is at least 1 penny or more, the candlestick will be green because that shows that price closed above the open. The wicks show that price moved at a certain level, right? It moved as high and it moved as low as those prices during that time frame. Now, a red candlestick is similar, but it is slightly different. Okay, so I'm gonna move this over here. All right, so a red candlestick, the wicks are the same, but the bodies are opposite. So the open price for a red candlestick is the top of the body, and the closing price, right? Closing price, close price, is the bottom of the body, right? And the wicks are the same. So the highest point is the top of the wick, right? And then the lowest point is the bottom of the wick. But as you can see, in this particular example, we opened at this price, we pushed up as high as this price, and pushed as low as this price, and closed at this price. So as long as price closes below the opening price, okay, the candlestick will be red, okay? And that's all this represents. So every candlestick represents a specific time frame and what we call price action. So the collective of these candlesticks represents price action. So if you ever hear the term price action, okay? So if you ever hear that term, price action, that's what this is indicating, okay? So we're able to know what price is doing based on these candlesticks within a given time frame. Now, the actual price is outlined here on the right of your chart, okay? You can also change the currency in the top right corner, keep it USD obviously, but you can actually see the current price here on the right. You'll notice that there's a green box, a green 229 here. That actually indicates the closing price of the candlestick farthest right. So this red candlestick here, it shows that the current price closed at $228.52 on that red candlestick that you see there. Okay. All right. Cool. So here, so far, what we've done is we've identified, hey, we can read candlesticks, we can read price action, and we can see current price, which is, I think, about 50% of the battle when you're trying to get into trading. Okay, so what are these bars down here? Well, these bars indicate volume. So in the world of trading, we have two concepts. Okay, I'm going to move over here for another concept here. So we've got two concepts. We've got supply and we've got demand. So supply is sellers and demand is buyers, right? So there's always this constant tug of war going on between buyers and sellers, okay? So I'm going to put a little happy face and I'm going to find an animal here. Let's see here. This looks like a bear. Cool. And then I'm going to open up the animal tool and I'm looking for a bull. Let's see if we can find the bull. Yeah, cool. That's a bull. Whatever. Okay. So buyers are bulls. Sellers are bears. Right? That's the concept. Okay. So whenever you hear that we are bullish, that means that we have a bias and towards the upside. That means we want price to go up. Okay? So buyers want price to go up. Sellers want price to go down. Right? So the way we make money is if you have a bullish bias, you are a bull, that means that you want price to go up. That's how you're going to make your money. If you are a bear, if you have a bearish sentiment, then you're going to make your money when price goes down. Okay? We'll talk about how sellers make their money in future courses. But to kind of give you an idea, obviously, selling something that you own, you would make money, right? But you can also sell something you don't own, which is known as shorting. All right. So if you are bullish, all right, so if you're bullish, that means that you are also long. And if you are bearish, that means you are also short. This is just market terminology, okay? So when you hear, hey, we're taking long positions, what does that mean? That means that we've taken a position where we've bought some shares of a stock or another security, and we are bullish. We expect price to go up, okay? If we are short, that means we've taken a position, right? We're selling a security, and we want price to go down, right? Or at least we want to sell the shares that we own, right? Cool. Very, very good. So now we've got some terminology here. These candlesticks represent, excuse me, these bars here at the bottom represent volume. Volume. So these bars represent volume. So the color of the bar matches the color of the candlestick. Now don't get that confused. There are sellers that are in this time frame of this candlestick, right? But overall, it shows that the total volume, it shows total volume, and the higher the bar is, the more volume that candlestick holds. So for example, if we look at this particular red candlestick, we can see a very, very large volume bar. Okay, what that shows us is that based on the current chart, so all of the candlesticks that exist on the chart right now, this particular candlestick had a significantly more amount of volume in this red candlestick compared to other ones. So the volume bar is weighted. Okay, so how do we actually see the volume? Well, we can actually hover over the candle and we can see the volume in the top left corner here. So in the top left corner, we see the volume there. So if we hover over this candlestick, we can see that there were 318 million shares traded in just this candlestick. And again, this candlestick all candlesticks in this example represent one day. So within that one day, there were 318 million shares of Apple that were bought and sold collectively. So this candlestick does not, this volume bar does not mean that there were 318 million shares sold. It just means that there were 318 million shares traded, bought or sold. Okay. Well, it does technically mean that they were sold, because in order to buy something, someone needs to sell it. But you get my point, right? Is that it was not all sellers. Because why? Because we can see a wick, right? We can see that price pushed up. Okay, so just keep that in mind. All right. And then back down here at the bottom of our chart, we have our time frames that we can drill in further. So because we are on the daily time frame, we see that every candlestick represents a day, and as such, we can hover over each candlestick and see the date at the bottom. Right? Right, cool. So that's pretty simple. All right, on the right-hand side, we've got some tools that we're just going to close out for now. We're just going to click this X, and we'll get back to it a little later. And then also, we're going to talk a little bit about indicators. So indicators are tools that you pop on your chart. They either exist directly on your chart or below your chart. An example of an indicator is volume. So as you can see, volume is plotted directly on the chart. Now it's not directly on the candlesticks because it would be like really hard to see, right? But it's plotted below the chart. But it's on the chart. So volume is a type of indicator. So indicators help us get more context as to what price is doing and what price can potentially do. We'll get into that a little bit later. Okay, cool. So if you want to drill in further, okay, so let's take an example of today. So you can right click the chart anywhere and click reset chart view, and that will take you to basically a wider view of the chart. Okay, so it kind of resets it, and then you can drag and scroll right and kind of zoom in, and you can see more candlesticks. Right, so kind of zoom in here. So this was the candlestick for today, September 23rd, but we have one here yesterday. So if I wanted to zoom in more, but I really wanted to mark out these levels of price, then I can use my tools here, and then I can drill in further. So we have our trend line tools in the top left corner. we'll click this arrow right next to the trend line, and then we'll click horizontal ray. Right, so we'll click horizontal ray, and then we see the top of this wick. Let's click the top of that wick and mark out that level. So what we've done is we've created a ray from the top of this wick all the way to the right of the chart, and it'll actually show you that price that you marked out. So in this case, it's $257.31, right? And then we'll mark out the same for the low. All right. So now we've marked out the high and the low of price for Apple on a 1-day time frame chart. So now from here, we can actually drill in to, let's say, the 4-hour chart, which will show us candlesticks representing 4 hours of time. So now we're breaking it down. So we're doing what's called multi-time frame analysis. So what we're doing is we're marking out our highs in higher time frames and then drilling in to lower time frames to see that breakdown even further. Okay, so here on the 4-hour time frame, we can see that red candle that we saw is now made up of several candles. We have this one here and this one here. Okay, really cool. And we can move in, we can drill in even further. We can go into a 1-hour time frame and see how the 1-hour candlesticks make up the 4-hour, right? And then the 4-hour makes up the daily. Okay. All right. So here in this example, the high, again, what was the high? $257.34, right? How do we know that? From the daily chart, right? We can see if we hover over that, the high is 257.34. So the high was 257.34. That happened at somewhere around, what is that, 1:30 p.m. And the low happened somewhere around 6:30 p.m. Okay, cool. So you might say, hey, well, 6:30, that isn't that past the market hours? The answer is yes. So what's really cool about the chart is you can actually see extended hours. So if I right-click the chart, I can go to settings for the chart, and I believe I can go to, let's see here, symbol. Cool. Yeah, cool. So symbol, and then I can actually click extended trading hours. And now what happens is my chart actually updates with a few backgrounds. So what do these backgrounds mean? So the sort of, I don't know what it is, cream colored shows pre-market in this example, and you can change the color. Let's say we wanted this to be, I don't know, purple. And then the other one represents post-market. So let's say we wanted this one to be yellow, right? So you can actually see extended hours from 4 a.m. to 9:30 a.m., which would be the purple one in this case, and then post-market, which would be 4:30 p.m. to 8 p.m. Cool. For my chart, I actually just keep it simple. I don't actually have backgrounds. And I like to keep my charts very, very clean. So, all right, so while we're here, let's also take some time to set up our chart a little bit better. So, setting extended trading hours is important. And if you don't see that, again, you might need to create an account. I like to keep my time zone based on Eastern. So that's going to be New York. So I like to keep all time based on Eastern time just because I'm on the Eastern time. And then I like to go to status line. So here in the top left corner, this is what the status line is. I actually like to turn the title, I like to turn it just to the ticker. So that'll just show the ticker name instead of the company name. It's just a preference for me. You can also show volume here at the top if you don't want to see it on the indicator, or if you want to see it here at the top. It's totally fine. We can leave that there. You can also see the previous days change, which I don't actually like that. I actually turn inputs off for my indicators, which we'll get to later, but it just creates some noise for the indicators here. And then let's see here, the canvas, I actually like a solid, almost black background, but I click this plus button here, and then I like to give it almost like a dark color, just like so. Okay. And then also, I don't have any grid lines on my chart, so I just say none. I don't care for grid marks. The crosshairs are totally fine. If I want to add a watermark to the back of my chart, I can. So I can throw the ticker Apple there if I'd like. Sometimes I do. It just helps inform, like, what am I actually trading? But you can keep it off to keep it a little bit simple. Let's see here. So cool. Yep. So again here, I'm kind of trying to find the same color, 111. Right, and then yeah. So that'll do it. Cool. So this is kind of like how I like to put my chart. I also like to hide the buy and sell buttons. And I'll tell you why. The reason why is because I actually don't trade through TradingView because it's really slow. You can connect it to your broker, but I just don't do it. Let's see here. And then also we have events. So here at the bottom, we have this purple button here. This basically shows you an event that occurred for Apple. You can hover over it and learn more. But I actually hide those because to me, it's just noise on my chart. Okay, so we're just doing some cleanup here. And let's see here. I think that about wraps it up for this. We'll come back to it if we need to. Okay, cool. So already our chart is looking a little bit better. Okay, good to know. And we can also even change the colors of our candlesticks if we want. I didn't even mention that. So if we wanted like, white candlesticks, we can do that. But we'll keep it green, but maybe we'll just kind of make them a little darker. Yeah, that'll work. Okay, cool. So now from here, what do we want to talk about? Let's talk about the indicators. So I've got volume, but let's say I want more indicators to help inform what price is doing. So here in the top, I can click indicators. Okay, and that will pull up indicators here. Now, there are some indicators that most traders use, but then you also have indicators that other creators have created. You can also create your own, but for the purposes of a beginner, you do not need anything more than what I'm about to tell you now. So here we want specific technical indicators plotted on our chart to help us inform, like, what is price actually doing. And the first one we're going to want is a term known as volume weighted average price, also known as VWAP. So you can type in volume or you can type in VWAP, doesn't matter. And you're going to want to click volume weighted average price. You'll see it under the technicals category. So you're going to want to click that. So when you click that, your chart will change slightly. You'll get this indicator known as VWAP directly plotted on your chart. Now VWAP stands for volume weighted average price, and it is an indicator that basically shows price relative to volume since the beginning of the day. So it represents average price factoring in volume from the beginning of the day. Okay, so what does that actually mean, Kaden? So what that means is, as price is fluctuating, right, we also have an average price based on the volume since the beginning of the day. So as volume is increasing, right, and as price is increasing, so is the VWAP. So is the volume weighted average price, which is represented by this blue line, and then the bands are represented by this green line. So we have an outer band or an upper band, and then a lower band. Okay. So again, as price is changing throughout the day, right, VWAP is also changing, right? So as candlesticks close and move on and open a new candlestick for a new time frame, the VWAP gets updated, okay? So as you can see, right, we have price moving up and VWAP also moving up. Now this VWAP represents the average price relative to volume. So what I like to do is I like to hover over VWAP and then click settings here. So you'll hover over, click this icon, and this will open up the settings for VWAP. And we're going to get rid of the bands. The bands are not necessary. So we're going to click style, and then we're going to uncheck the upper and outer band, like so. We're also going to click uncheck the bands fill as well. And then we're going to click the color of the VWAP. I like to use white. It's just my preference. And then we'll keep it as a line. And we'll keep the visibility on all time frames. So what this shows you is that like I can hide the VWAP on hourly time frames or show them on time frames. I like to see them on all time frames. Then also I like to turn this off and this off because I don't need them. I can literally hover over the VWAP and see the price on the right hand side of the chart. So all of this you want to keep the same. You do not want to touch any of this. And we'll just click OK. So now we've got our VWAP. So another indicator that we'll want is a moving average. So there's two types of moving averages. One is called a simple moving average, and then one is called an exponential moving average. We're going to want the exponential moving average. So we're going to type expo, and then we'll select the moving average exponential. Right? So we'll click that, and it gets plotted on your chart. Again, it starts off as blue. So we're going to hover over settings. We're going to click this one, and then we're going to update the settings. Now, what is an EMA? Exponential moving average is simply the moving average from the previous X amount of candlesticks. So in this case, the EMA length is 9. So what that indicates is if I were to hover over this candlestick, that means that this price, which is $241.69, is the average price of the last 9 candlesticks. So 1, 2, 3, 4, 5, 6, 7, 8, 9, right? So the last 9 candlesticks, it aggregates those and then does a little algorithm and then shows you the average price of the last 9 candles. So for the style for this one, I actually like yellow, and then I like the line, and then again I like to move the turn off the labels and the values. So this shows me my EMA for the last 9 candlesticks, and I do not touch anything else. And then I'm going to go back to indicators, and I'm going to do that again. So I'm going to type in EMA or expo, click it again, and then I'm going to click it a third time. So for the second one, so I'm going to have 3 EMAs. So for the second one, I'm going to click the settings, okay? And then instead of 9, I'm going to do 20. So this one is the EMA 20. So the last 20 candles instead of the last 9. For this one, I do keep it blue. That is what I choose to keep my EMA on. And then we're going to go to the third one, and this one will be EMA 200. So the last 200 candles. And again, I think I do keep this one purple as well. So there are my indicators. And to be honest, these are the only indicators I do use when I trade. So I've only got 1, 2, 3, 4, 5 indicators here on my chart. So as you can see, what it allows me to do is create confirmation of price. So as price is moving up and rallying up, it seems to respect the EMA 9. So as price rejects and touches that yellow line, if I zoom in here, let me zoom in here and kind of drag this up a little bit. Oh, yeah, my prices do seem a little out of whack. So let me go back to settings. Let me go to canvas. Maybe scale lines. Let me see here. Previous day. See here, symbol. There we go. We want white text instead of black. Sorry about that. All right, so as price is pulling back, so we can see here that price pulled back to as low as $240.25. It rejected and pushed back up. So it's respecting the EMA 9. It's also respecting the EMA 20, respecting the EMA 200 because price is well above those. And then it breaks VWAP. So it breaks, meaning that it crosses VWAP, right, and closes above. That's a strong indication that price is continuing to the upside. So if I were trading this and price closed here at 242.83, I might take a buy position here because what I'm seeing is that we break in a previous high. So again, if we go to our horizontal ray here, mark out this high, right? What we see is that price sold off, rallied back, sold off, rallied, sold off, broke that level, rejected, closed here. So we opened here, we broke that level, we rejected and we closed. We opened again and we broke it again significantly, and then we closed much higher. Okay, so what we've done is we've had a change of character, right, and a break of structure. Right? So the change of character, boom, and then a break of structure. Cool. So we had structure where this candlestick, which represents 9 a.m. Thursday, September 18th, right? We had a high, right? We opened here, but we closed there. Price sold off, and then several hours later, we rallied back. We broke that structure and continued up. So I might place a buy order here because what it's showing me is that price, current price, opening price at this candlestick is respecting VWAP and EMAs. So it's well above those lines. All signals that price can continue up. So I might place a buy here, and hour to hour, as we can see, price is respecting. Even at moments where volume decreases, so for example, you can see that this huge jump happens in VWAP. So again, VWAP represents price relative to volume. The volume, right, is factored in. We had a strong volume here in this candlestick, 53 million shares that we see here. So that's factored in, right? So as price continues here, the VWAP increases, right? So this candlestick opens here, and then we sell off, but we reject. So we are continuously respecting the EMA 9. So the last 9 hours, we're respecting that price, which still indicates a bullish trend. So bulls are in control. Big bull stuff. Big bullshit. So we're pushing up. We test that level and we reject. So we would be holding, have a small retracement, and we are continuously respecting the EMAs and the VWAP as well. We do cross the VWAP, but we at least are respecting the EMA. So what does this show us? It shows us that our EMAs can be potential levels of support. Right? So we have two concepts here of key levels. One is called resistance, and then one is called support. Okay, support. So sellers sit at resistance levels, buyers sit at support levels. What does that mean? So that means that when price pushes up to a resistance level, sellers are going to resist and sell off shares at that price. Why? Because they want a profit. And when that happens, price will go down, right? It's not going to break this level until bulls, right? Until buyers have enough momentum to break that level. In other words, as price is fluctuating, when it hits that resistance level, it's going to bounce off and sell off. And then when it hits the support level, it's going to bounce off and come back up. So it's just going to keep coming up and down until we finally have a break of structure. Okay? So when we have a break of structure, then we want to retest that level to where now a level that was once resistance now becomes support. How does that happen? Right? How does that happen? Well, what happens is it was resistance at one point, then buyers stepped in and overpowered the sellers, pushing price up, and then sellers sold off again, right? Or even buyers who broke that level became sellers, so sellers are selling, and then we retested that level and rejected. So what that tells you now is that there are buyers sitting at that level. Okay? So now that level of resistance now becomes level of support for the next leg up. So for the next level up, that level is known as support. Why? Because there are buyers sitting at that level where we rejected. Now you could say that this level is support because that's the bottom of the candle, right? That we push price down and then we reject it, right? So this is important because it shows you market structure, which is what we're describing here, and it shows you what price wants to do, right? Price wants to continue up so long as we're respecting these levels. Anytime we're hitting that EMA, those last 9 candles, we're rejecting and continuing up, all the way up, all the way up. So even though we're having these pullbacks, these sell-offs, we're respecting them until we top off here, at which point we cross over the EMA 9 and close below the EMA 9. That indicates a reversal. So now at this point, this level is our new resistance, right? And our potential support is the bottom of this candlestick currently, which is near the EMA 20. So the last 20 candles, we push price down and we reject it. Now, what you'll actually notice is that this is what I'll call weak support. So this is, you can call this support, but this is weak support in that price, because we are now at a new high, I'm expecting price to come back down, retest that level, reject, and this will become the new resistance. So if we go back to our tool over here, I can click this one here. Let's click, let's click this trend line. So I'm expecting price to come down, right? Come up, and then come back down, right? So that's what price does. So even though this is currently support, I'm expecting price to break that level, for buyers to step in to retest that level, and then support now becomes resistance, right? So that's when that becomes resistance, because we will retest that level, right? And then we will continue down until we have what? A change of character and then a break of structure again, okay? And so price does this constantly. If we zoom out, maybe zoom out like this, price is constantly doing that dance where it's rallying up, break of structure, creating new levels of resistance, selling off, retesting levels of support, and then creating trends, right? In this case, down, right? Until we have a change of character, change of character, change of character, change of character, and then a break of structure. So if we mark out this high, right, in this example, right, we can even mark out this one too. We had a downtrend, so price is definitely going down, right? We try to push up, we reject, push up, reject. We test that support level again, reject. So buyers are sitting here. So this is a strong support level, right? Buyers are not willing to go lower than here. We rally up, and then we have a break of structure. We retest that level, and we reject, we retest it again, and break it again, but reject again. And then we continue up, break of structure, right? We retest it again, right? Goes down, and then finally, a strong push to the upside where we broke those key levels. Now, what's interesting to note is that you could say that because we broke that level, this one here, several times, 1, 2, 3 times, it got weaker every time we touched it, right? Just so even here, right, this line here, if we broke it 1, 2, 3, 4 times, that level gets weaker and weaker. So if bulls step in with high momentum, with high volume, in this case 9 million shares, price had a significant push to the upside from $230 to $239 and some change, right? And so price does this dance. So as a trader, for those who have a bullish bias, which most of us do, right, we don't trade against the trend. We trade with the trend. So if price is going down, we do not buy. Why? Because our indicators tell us not to. Price is showing us that it doesn't want to respect the EMAs. It doesn't want to respect the VWAP, right? It's always moving below it. And until it shows us clear signs that it wants to respect it, we don't trade. We want to make sure we wait. And so here's an example where we could potentially take a buy, right? So if we zoom in here, and you might ask yourself, well, how would I catch this? Well, number one, it's at 4 p.m., so it's probably not something you would have caught. But if you were looking at the charts, right, you would say, okay, let's mark out the low, right? And then let's zoom in even further on the 1 minute. Oh, excuse me, on the 10 minute. I'm going to zoom out here. Let's see here. Yeah, there we go. So on the 10-minute time frame, our candles show us that like we are gaining momentum. So we had a strong rejection here. You see that, how long that candle wick is? Now that actually indicates manipulation, which we'll get into a little later, but that indicates manipulation from institutions where they're basically gobbling up all the orders, right? Because what did I say? I said buyers sit where? Below support, right? So below key levels, right? So buyers are sitting here waiting to buy, right? We also have We also have stop losses here, right? So we have people who have their stop losses right here. And so what happens is price opens here, and then we have a strong rejection, right? We have a strong sell-off, and then a quick wick back up, right? So what that shows you is manipulation, where institutions who have the money to manipulate price, right? Their problem is they want volume, right? They want orders filled, so they manipulate price. They go seek liquidity. So because buyers sit here, right? This is known as liquidity, which is essentially orders resting orders. It's literally money waiting to be filled, right? So when you place limit orders at a specific price, or you place stop loss orders at a specific price, they sit here at these levels. So institutions see those, and I can see those too, and we'll talk about it in a future video, but they see those and they gobble those up for the real move, right? Which is the push to the upside. So there's this term called accumulation, manipulation, and then distribution. And that's a prime example of what happened here. But you might see this as a retail trader and see that we had some manipulation here, and that price rallied up and had a break of structure here. So if we marked out this high, right, and we broke that level, we might place a buy order if price is respecting the EMAs, right, and the VWAPs, which it was. So you might be aggressive and buy here, or you might wait till this candlestick closes and buy here, or maybe even down here somewhere. But it's respecting it, and then once you see that it's crossing maybe right here, that's when you would sell off. So in that case, it would be somewhere around $230 to $236, so about a $6 spread, which is a fantastic spread if you're trading. So, all right, cool. If you want to change your tickers, you can click the symbol, or you can click the magnifying glass here, and let's say NVIDIA, and you can just type in the stock, the ticker, and then select it. Always reset your chart view if you get overwhelmed. And then you can zoom in and kind of see what price did. Another form of accumulation, manipulation, and distribution. Strong push, and then we started to not respect it, so we might sell off. Another little small rally, but overall we're now in a downtrend, and we've broken that, we've retested, so we have the potential to push back up. But as you can see, the EMA 200 sits right here. So what this shows you is that the last 200 candles on the 10-minute chart, this is the average price. So your EMAs can act as levels of support and resistance. Okay? So until price breaks this purple line, until it breaks that level, you are fighting a downtrend. Right? Even though price is above the EMA 9 and 20, it's still below the last 200 candles, right? Which shows us that the average price sits here, but the current price sits down here. So you're fighting against the trend. We would not want to take a trade, right? We can see a strong sell-off here, right? And we're creating lower lows and lower highs. So we have a high here, and then a lower high, lower low, lower high, right? Lower low, right? So until we have a change of character and a break of structure, and all of our confluences line up, right? So all of our indicators show us that price wants to continue forward, we would not want to take a trade, because we would be fighting against the trend. And it's as simple as that, for me at least. It's as simple as that. We are identifying trends on multi-time frame analysis techniques. We add our indicators on our chart, and then we look at price. Now, one last thing to note is that with all of this, we can now start trading with fake money. And to do that, in this example, I'm going to have to use futures for now because the market is currently closed. So I'm going to use the S&P 500 futures in this example. Looks like, wonder if we're still even open. Let me see. NQ. Well, let's use Bitcoin. Yeah, let's use Bitcoin. Okay, cool. All right. So to set up fake trading, we're going to want to open up the trading panel. It sits down here at the bottom left corner. You're going to want to click this trade button here at the bottom left corner. This pops up, and then you want to click paper trading here at the bottom left corner. If you don't see that, just click whatever button that is. It might look like, yeah, it looks like this. So click trading panel. This will pop up where you can connect to your brokers, and you're just going to want to click paper trading here. And you're going to want to click connect. So now we've connected a paper trading account, and from here you're going to want to go to paper trading here in the bottom left, and you're going to click trading settings. Oh, excuse me. You're going to want to click you want to click this wheel here. It kind of shows you some options here that you have. Really cool stuff. And then let's see here. For USD, it should start you out with 100,000, but you can change the settings to however much you want. So like if you want to change the balance, you can. And I start out with 100,000, so that's just me. All right, cool. So now you have the ability to trade directly in your chart. So we can place buy orders. In this case, we can place limit orders at a specific price or market orders if the market is open. In this case, I'm going to place a limit order to buy 1 Bitcoin, currently at the price of $214,000. And you can also place a stop loss and a take profit if you'd like, which I highly recommend. So I can say I want this order to be in force for a day, week, month, or good for the day. And then you click buy. And the order has been submitted and actually executed at the same time because there was basically Bitcoin available, but it's fake Bitcoin. So I wish it was real, but it's not. So now I've taken a long position with a stop loss at 112,176 and a take profit at 112,276, right? My current price is 112,214. So we see our average fill price here, our take profit, our stop loss, and then our current P&L, right? If we want to add additional shares, we certainly can. If we want to add another one, we can buy another one, right? And now we have 2. And that will also update our existing order, right? With selling both those Bitcoins if price hits that level. So yeah, now that you understand that, you can also close your position. You can click this to close it, or you can place a sell order as well if you wanted to sell those. Make sure to sell your total position in this case. So we want to sell both of our Bitcoins, and we'll just click sell, and there we had it. We just lost 16 bucks, but we placed our first trade. And that is it. That is pretty much it. So with all of these tools in mind, you can get more comfortable trading using fake money. You will have to trade stocks during normal market hours or futures during normal market hours, but because I think crypto and Forex are like 24 hours, you can trade those all day, every day as you see fit. I do not trade those, so I cannot help you with those, but you can certainly place trades. Just click the trade button in the bottom left corner. It'll open up the trading panel, and you can place your order like so. You can also drag those orders if you'd like. So you can drag them directly on the chart and update your orders. And then you can close out your position if you'd like as well. Right, so trying to see if there's anything else. You can also create alerts. So if I wanted to add an alert at this specific price, I could do that. Or if current price crosses a indicator such as my VWAP, right, I can place those alerts. And the right hand side is where you'll see those alerts. You can also create your watch lists of different stocks that you want to watch. Really cool stuff. And then if you get confused, we have this object mapper here, which you don't really need. Let's see here, anything else interesting? Our tools here, we have our raise, which I like a lot. We have our Fibonacci retracements, which shows you premium and discount prices. So you'll click the top of a high and the bottom of a low, drag it out, and you'll see a Fibonacci. You don't really need that as a beginner. All these different pattern tools, which again you don't really need. We've got our long position, which I love. So before you place a trade, you kind of want to know where your stop loss and your take profit's going to be. So you can drag it, place it to where you want to buy your shares. You can drag it below, like let's say I want my stop loss to be below the low of this wick, and then I want price to be as high as up here. It'll also show you your risk reward ratio, so a 7-3. And then if you double click it or you right click it and click settings, you can place in like your account size. So if I had 100,000 in my account and I'm buying, one share of USDJPY, right? And I'm risking $1,000 on that trade. If price were to go to my stop loss, then it'll actually show you what your account will be if it hits your stop loss, and then if it hits your take profit in the amount. Sometimes this is good. Sometimes I don't really care to do that. But as a beginner, I highly recommend you do it. Just put in your account size, how many shares you're buying, what you're risking. So you might have to do a little math, right? So if current price is, if your entry is at 58 cents, but your stop loss is at 54 cents, that's a 4 cents difference, right? At one share, right? That's only, that's not a lot of risk here, but you'll have to play around with the numbers and kind of get familiar with that. So yeah, we have the long position, and as similarly, we do have a short position tool as well, which is the reverse. I don't use it because I don't take short positions. Let's see here. We have arrows, brushes, rectangles, text, and emojis. And then also the magnet, which I also like. So if you can't actually anchor stuff right, so you see how it's not anchoring right, you can click the magnet, click this, and it'll actually anchor to the top of the wick, which is nice. So that'll just help you with anchoring stuff. And that's pretty much it. So as you can clearly see, it's not much to it, and it's all completely free. See here, let's go back to stocks, go back here, reset our chart, and yeah, as you can see, if you go back to your charts, your indicators stay there, and as well as your drawings, but you can delete them if you need to. All right, well, that concludes this demo on how to do some paper trading in TradingView. I appreciate you taking the time to lock in with me. Be sure to share this with your friends, and I appreciate you joining the Discord, and reach out if you have any questions. All right, take care, guys. Peace.